Hi everyone, I'm Cameron Dunn.
And I'm Geoff Isaacs.
Superannuation. What is it? Why is it important? And why should it be at front of mind at any age? Superannuation has received a lot of attention this year due to the effects of COVID on people's balances, the early release of super, and the Australian government putting industry super funds on watch. Earlier this year, the Australian government allowed Australians to withdraw up to $10,000 in 2 separate withdrawals to help with the burden of COVID.
While this provided a lifeline in terms of cash flow for people, it may mean that your balance has been significantly reduced. At any age, it's really important to understand where your superannuation is, how it's invested, and what you can do to improve it going forwards. Until we get close to retirement, sometimes we do not take this important step.
TJL Financial Management is an authorised representative of Lonsdale Financial Group. The content of this presentation is general advice only and does not take into account your financial circumstances, needs and objectives. Before making any decision based on this presentation, you should assess your own circumstances or seek advice from a financial planner and seek tax advice from a registered tax agent. Information is current at the date of issue and may change.
So what is superannuation? Superannuation was introduced by the Australian government with the goal of seeing more Australians become self-funded retirees. It is a tax-effective investment structure that's designed to provide an income stream for retirement. The Australian government continues to reiterate how important superannuation is to Australians by recently legislating an increase to employer superannuation contributions to 12% by 2025. This increase aims to reduce the number of individuals relying on the age pension in retirement. As shown in our last video, relying on the age pension in retirement may not provide a comfortable lifestyle.
Superannuation provides many tax advantages where earnings are concessionally taxed at 15%. Making additional contributions can also provide tax savings by reducing your assessable income when making concessional contributions. A superannuation is usually invested in a wide range of assets. These include cash, fixed interest, property and shares. For many of us, our superannuation ends up being our biggest asset other than our family home. This is why it is important to ensure that it is doing what it is supposed to, providing us with retirement savings.
Our role is to provide you financial advice to accumulate sufficient superannuation assets for retirement. This includes aligning your superannuation assets to your goals and objectives and ensuring we only take the appropriate amount of risk for your portfolio.
So why do you need to worry about your superannuation now? You may be young, have a young family, have debt to repay, so why should you consider your superannuation if you're not going to retire for another 20 to 30 years? The important thing is that even though you're that far off retirement, you need to consider having your superannuation set up properly now so that it is working for you to provide you with retirement savings.
The earlier you start, the better your chance of achieving a comfortable retirement through the power of compounding returns. Not focusing on your retirement strategy early could mean you do not have enough time to accumulate sufficient assets for retirement. You may need to continue working, or you may need to sacrifice something you hold dear for your retirement.
So how much do you need for retirement? As shown in our previous video, the Association of Superannuation Funds of Australia estimates that singles will need $545,000 and couples will need $640,000 to live a comfortable retirement. But what if you want to fully enjoy your retirement and live a better life than this comfortable lifestyle standard?
These figures indicate that singles require $43,901 and couples need $62,083 a year to maintain a comfortable retirement. These income levels may be appropriate averages, however many will require significantly more to enjoy the lifestyle they intend to have in retirement.
A paper published this year by the Association of Superannuation Funds of Australia shows that in 2018, the average balances of employees in Australia per age group is as follows. Pause the video here and see how you compare to the average for your age bracket.
These figures give you an indication of where you sit among your peers in terms of retirement savings. Whether your balance is higher or lower, it is imperative that you consider your superannuation assets with regards to the lifestyle you envisage for your retirement.
As shown on this slide, the ASFA found that the median account balance for people aged between 60 to 64 is $154,453 for males and $122,848 for females prior to retirement. This is well under the comfortable retirement standard.
Once your retirement income levels are clear, we will develop a plan that maximises your chances of achieving your goals. There are a number of strategies that can assist in building your retirement assets. However, we believe that a systematic and disciplined approach to increasing your superannuation assets is paramount.
In our example here, we have John and Zach. They both earn $65,000 a year, have identical superannuation funds, and are both set to retire in 25 years' time. Zach contributes an additional $50 a week into his superannuation account over the 25 years, whereas John does not. When they both reach retirement, Zach has an additional $127,624 than John.
We see a number of potential issues in superannuation strategies when clients first engage TJL. These include having numerous superannuation accounts, not being aware of the fees, being uncertain of investment performance, and the impact of insurance premiums within their superannuation.
We'll use John and Zach through these next few examples to highlight why these issues are important to consider.
Over the long term, higher fees can significantly reduce your superannuation balance. This includes the life insurance premiums you may pay. Using the same scenario with John and Zach earlier, John pays total fees of 1% of his balance and Zach pays 1.5%. This 0.5% difference is a reduction in overall retirement savings of $35,499 over a 25-year period. Fees are something we do have control over, and at TJL we maintain a strong focus on controlling costs for our clients.
This is why it's also important to consolidate your superannuation if you have multiple funds, as this will ensure your retirement savings aren't being reduced by paying excess fees. As we change jobs, we often have new superannuation accounts open for us by our new employers. This means we're paying fees on more than one account, which can significantly reduce our retirement savings.
We are regularly asked about investment return and what an appropriate expected return number is.
Over the long term, the returns your superannuation fund is generating is extremely important in ensuring your retirement savings are maximised. As shown on the screen now, we compare John and Zach's return over a 25-year period when they intend to retire. John's superannuation fund produces an average return of 6.75%, while Zach's produces an average return of 5.97%. When they both retire, John has an additional $54,450 in retirement savings than Zach.
While we can't control returns, we can implement a well-considered investment philosophy to ensure your retirement savings are invested in areas that offer potential for greater returns while ensuring that you're exposed appropriately to investment risk. As you have seen, small changes now can make a big difference for your future. We hope that this video has shown you the importance of ensuring that your superannuation assets are appropriately managed and well invested. We will also cover self-managed superannuation funds in a future video, as this is an entire advice area in itself.
Should the information today resonate with your circumstances, please feel free to get in contact with the TJL team for a cost and obligation-free consultation, and stay tuned for our next video that will dive into cash flow management and budgeting. Thanks for watching.
Thanks again.